far? Exploring the wingspan. A wingspan. How far? What's a wingspan, Tony? How far?
Oh, how far is a wingspan?
How far should you do it? Like most of the time, like when we don't trade a lot of SPY iron condors, but we do, we're usually like $5 or $10 wide. You know, right? Most of the time, 5 or 10.
Yeah, and I think that's a little bit too tight on a $400 product. So like on a $400, $20 would be probably my go-to on something with defined risk in a $400 stock. I would say you can go $30 wide, maybe even $40 wide on extreme, but I think $5 is too tight. $10 is probably okay. $20 is probably my wheelhouse.
I tend to agree. Let's
on a
take
$400 product.
Yeah, let's take a look. So the market is still near its peak, and there are lots of potential threats that could result in a drawdown or a downturn. To reduce risk-defined strategies such as iron condors could be a better choice than leaving positions naked. Could be, nobody knows. So how do the wings impact the performance, and what is the ideal width? Let's take a look. So we tested the ideal width by analyzing 45-day to expiration SPY iron condors. We sold 20 delta strangles, and then we bought 1, 5, 10, 15, 20, 30, and $40 wide wings. We did every single thing.
Okay,
we compared the results, holding them to expiration and managing at 50%. Winners and 21 DTE. It's rare that we will hold an iron condor to expiration. When was the last time you held an iron condor to expiration?
Only if it was basically a full loser hoping for a miracle.
Yeah, I don't think that I can't even remember the last time I've held an iron condor to expiration. So 50%, that's really pretty much where we live, if we can get there. Or 21 DT. Let's go to the next slide. Okay, lots of stuff in here, and it's cool. So, as expected, the wider the wings, the greater the credit, the greater the profit, and the success per position. So extremely wide iron condors, like $40 wide, act much like strangles, Gesundheit. Given that buying power requirements are more expensive for larger condors, iron condors, it's time to look at all the return on capitals, which become a more relevant measurement. So we put here, just to give you kind of the example between, 1, 5, 10, 15, 20, 20, 30, 40, and strangles. We got all the information there. These are averages, over whatever period of time this is. I think he said it was like 17 years. So you've got your win rate, which I don't think would surprise anybody.
That's just the math model, right? I mean, you're putting these on with 20 deltas, you're going to be somewhere in that 70-ish range, right?
Yeah. Right. That's that, because you're not doing
that's just, I would have told you that without seeing anything.
And then you can see the P&Ls on the right-hand side of the page. We're not suggesting that on this one here yet there's any, wild takeaways, except for the fact that when you look at this, the first thing that should jump out at you is just that, oh my God, how symmetrical could that be?
Sure.
How perfectly symmetrical. Okay, right. Let's go to the next slide. So here's where we start to get a little bit of a cleaner look. So holding to expiration, and again, we don't hold to expiration, but we had to cover everything. Iron condors with wings between 10
it's also the cleanest way to look at something. I'm sorry to interrupt you.
Yeah,
it's also the
fair.
Cleanest way.
It's fair.
You can't fudge the numbers, right? It is what it is.
It is what it is. Right. So iron condors with wings between $10 and $20 offer the highest return for the investment, providing a better balance of profitability and trading expenses. That's your capital efficiency. So there's the cleanest look at it. 10, 15, and $20 wings. And this is, on using the 20 delta as your short, and then your wings just setting them apart. So in this case, the $15 apart, $15 wide, turned out to be the best.
Yep.
Holding to expiration. Let's go to the next slide. So on this slide, This is when we take our winners at 50%, which
is something that we like to do and we'll look to do.
Which is something that I mean, and when you look at this, so we observed a similar pattern here. Plus, the trade duration starts to stabilize once the wings go beyond $10. So what's neat about this is that this is right in our wheelhouse. So look at the days in the trade, right? Yeah. 23 days in the trade takes you from 45 down to 22. And 15 deltas is the perfect, sorry, not 15 deltas, $15.
$15 widths. $15 100, widths. 115.
Yep.
185, something like that.
$15 widths gave you the highest return and perfect days, 23 days, right in the wheelhouse to get to 50% winners or whatever is closest at 21 DT.
Really good visualization and a nice kind of area to look at.
Super simple to look at, super simple to understand. Mm-hmm. Let's go to the next slide. So here's the 21 DT. So we mix it up in all the different things we do. Now if anything, this is our wheelhouse, 21 DT. Mm-hmm. So 21 DT is kind of where we live. So the 21 DT is the managing early approach, shows much lower variance across the different wings, and the strategies with 15 and 20 outperform the others. So this 15, this has been the leader in the clubhouse the whole time.
Right.
10, 15, 20, they all work, but 15's been the leader in the clubhouse for every scenario. When we looked at holding to expiration, we looked at managing 50%, we looked at 21 DT, when we looked at return on capital. Okay. All of them 15 strike was. And now, would it kill you to go, a little bit more? And the answer is no. Of course you can, but that's the perfect number. Remember, all we do here at Tasty is optimal.
Right.
So
right.
Let's go to the next slide. So it looks like the $15 to $20 wide Spire and Condor would give us the best bang for the buck. Considering SPY's average historical price is around $200, that means we should make our wings about 1/10 of the underlying price. Well, now it's actually, much different than 200. I don't think it's going to be back to that.
Sure.
But they're just trying to use, something. So 1/10 of 450 would be, $40, $45, right?
Yeah, you're right. Yep.
Yeah. So in this case, it would be a little bit wider because the index is that much higher. So takeaways. Among all iron condors, selling the $15 to $20 wide iron condor and SPY provided the highest return on capital. Managing the position early can help smooth the volatility across different iron condors and boost their performances, particularly in the most extreme circumstances, the very narrow and the very wide ones.
So finding what we have here, and we've looked at stuff like this before and come up with very similar results, that 10%. Now that you've jogged my memory a little bit on that, will you adjust something moving forward on a trade that you make on a higher price stock? Because sometimes, like when we're on the show and we're doing a trade in ABC stock that I don't usually trade that much, and it's a $200 stock, I'll go tighter because I want to take less risk. I'll go to a $5 wide iron condor just to place a trade on with a 60 some odd % probability of success. And I won't go to $15 or $20 wide because I don't want to use the buying power and more importantly, the risk of the trade. I'm just like kind of dipping my toes in the water. Will you adjust from now on just because the numbers are going to play out better? It's a tough one, right? When you look at what's optimal, because the numbers are still going to work out to be what they are, right? Like, they were all that 65 and above probability of success. I think it was closer to 67, but they were all at 65 and above probability of success. It was just the amount of money that you made by the amount of buying power you're using, that optimal number that was enhanced. So again, I'll ask you, do you change your size and go wider even though you're uncertain or new to that stock?
It's so hard to do that. It sounds really good on paper, but it's hard to do it when you're actually trading it because then you kind of want to just be naked. But yes,
well, then you're taking it to a whole nother place.
No, I know, but yes, I'm going to try.
Yes, you're going to try. Try equals fail, Sosnoff.
I don't think
okay?
that's true. I don't think try equals fail.
Yeah. You either do it or you don't. Somebody sent me an email last night. We went back and forth a couple of times, and they said, do you have any income type trades? And I wrote back pretty quickly from my phone. So I apologize for the first short answer, but then you wrote me back 3 or 4 more times after that. We got into it more elaborately. I said, yeah, every one of my trades I make for income trades. Every one of my trades I make, I want to make money. I don't look at it as like, well, this is a sure thing. If it was a sure thing, I'd put all my money in that sure thing every month, and I'd have more income than just my income trade. That was the way I answered it. This is the way you said try just now. Like you either do or you don't.
I will try to widen the strikes.
We're going to take a quick 90-second break and come back. We got more Tasty Live. Even the S&P is up 10 1/4. We'll be back in 90 seconds, but it's a little bit more than that.
Perfecto.
I'll try.